Here we go, MMTs. We have our weekly chart right up here right now. This is on the S&P 500 weekly SMF market maker platform on a weekly level. Everything that we do, as you have been trained in your apprenticeship, correct, MMTs? So you know what the math is, you know what we've done here. And we're also going to show you once again to cap the monthly movement on a weekly level is that we had 1 week, 2 weeks, 3 weeks, 4 weeks up, just as anticipated right off that bottom of that 1075 handle. Is this true or false, MMTs? And look at the bid pops. The S&P was up here at the highs of where the reversal was as we are recapping these weekly areas. Here it was at the time, 1349.88 was a half bar, but most importantly that was the week of 5/2 that we said that we were going to have that great correction, and we did. And in the S&P 500, we had put in the first calendar 52-week year low, as we did during this volatility process, and that all MMTs went through this whole yearly bottom calendar year, including this big movement in the S&P off of this 4-week breakout. And that we've come right back up here and we've hit that major diamond where that diamond reversal was all the way down. We're challenging these diamonds right across here. I'm going to go ahead and move that out of the way, but you take a look at that diamond right there and you come right across to these weekly diamonds. This was where the weekly diamond breakout was when we made that first top, and that was in the calendar week of 1/31 of 2011, and we finally had made the highs on 2/7 of 2011, had that 4-week reversal in the S&P as we did. And at the very same time that this was occurring over here, this is a fear indicator that was put in bottoms in relatively around the very same time. And it's understandable that when we told everybody throughout the calendar year that the complacency levels were very low down here and the highs and the lows was 15, they were 20 here. This was in the week of 5/23 of 2011. Because it was. And here's the info panel right here, MMTs. There it is. Okay. And the half bar at that time in the fear indicator was 1770, back over in the very same time frame that we were putting in highs up here. These bottoms and the complacency of the fear was being put in. So when we were putting in that 4-week reversal here, we had broke out 4 weeks here in the fear. Okay, and then when we had the same thing, and we have it all live, we're just recapping the year so that we know how the S&P will end up. There's that 4-week reversal. We came down those weeks in here, then we started putting that complacency fear in there, and that's when we started topping out, and we had that last burn when that came down. So in these 3 weeks, we had that last burn. We had the last burn in this period of time, when we have very low complacency levels of fear. But then all of a sudden what happened is on this fear indicator is when we were putting these top reversals in, we were breaking out to all-time highs to 47 as we were calling that short. And you can go to stockmarketfunding.com. We told you at late April, look for a big washout in the market. We got it just like we said we would. The other thing that we would like to tell you is that there were bottoms being made at times, just as we were making highs over here in the fear indicator, as it too itself had pulled back. And once it went down, we started making bottoms and new tops. And that's what this whole fear indicator in volatility was about, was when we got over here at these tops versus these bottoms over here. So let's get back to the bottoms and let's stay focused during this time frame here on the weekly level, and then the big breakout. Okay, and when we had the big breakout, well, then of course you had the big breakdown to the first bottom. And the thing about it is we went through it all together, and we went long, we went short, we made markets throughout that period of time. But then we started getting over here in the calendar 52-week yearly lows on the S&P calendar 2011. And here we had that price action movement within the upside volatility only to get net short on the way down to this very bottom. And when this very bottom was made, this very secondary top was being made at a lower high than the previous one that was up here from that reversal down to the very low of the S&P. As we said, we would hit the 1075 handle, and at that time you'd get a big short cover rally. Whoop! And most of the people, 85% of the people, whether it be on the S&P, whether it be on the Dow, whether it be on the NASI 100, whether it be on the Amex, whether it be on lots of different things that we cover, is that we do cover the actual price movement. And how do you turn that into profit, and how do you gauge that? So as the fear was reversing 1 week, 2 weeks, look at here, 1 week off of the low, 2 weeks to follow. Now, let's get over here and take a look at it. So, as the bottom got put in here, that's that top. We understand that, MMT. You were here. But when we got down here, and we put that very bottom in, on that weekly movement back up in the fear, that's when we had over here this pullback before we made the bottom here. See? So you had that pullback and you had the fear go up, but it did pull back. The thing about the fear is the same thing right along with the S&P here. Okay? You can see the 2 wicks here. Now MMTs, check it out. It hits that fear level, and as it hit that fear level up there, this one also sold down. But this one stopped, and this was part of this whole movement right here. When we hit that high and we've come down here, that's this top up here. So you got 1, 2, 3, 4, and you've got 1, 2, 3, 4, and you're on the 4th week down. But it all started right up in these diamond areas, right down here with these. It all started here, and it's ended right here, right now. And this is its breakout on the fear. So we're below. This is 24.53. We're below 25. Remember, back in our Big Bear days, we were talking about you had to get below 30, and that the lower that this goes, if it goes lower, then a lot more people are going to be confident, and it's going to show up in this side of the market, MMT. That means that there's still room to break above these diamonds across our weekly MMT platform, and you know what these diamonds mean. And this is the full weekly, yearly movement here. So we can break. We're going to be looking at what happens up here at these diamonds. We got to get past this diamond and all of these diamonds that are right across here. We got to cover these right here. We got to close above these two right here on a weekly level. All right? And in order for that to happen, then that means in the fear indicator over here, we're going to come down. And the more we come down, the higher end that we go to resistance over here on the S&P. So if we get up here and we're down here, at some point it's going to stop. We'll take whatever long side or short side comes very first to the market, MMTs, meaning that we will have the exact price action at those points, understanding, once again, my friends, is how it will work at the next major turn. And that this half bar right here, this is a key. Upside half bar is 13.35 on the S&P. All right? This half bar right here, that's going to be 13.04 handle on the S&P. And MMTs, you know in your yearly formula what that means. So this bar, weekly bar, was set in on a 6/27/2011 at 1200. So that's where this bar is. That's that number, 1304 on the S&P. Right now, when we were putting this first yearly calendar bottom in, we're going to take a look at this half bar right here. That's 1284, and I think on the S&P 500 on Friday, we closed at 1285.09 MMTs, and this half bar at 1284.27 weekly was set in on 6/6/2011. And it's very important for you to know that, because from that 4-week breakout, just remember that the volatility fear indicator here has got to delta down. If it's going to delta down, then you're going to leverage back up to the next key weekly resistance levels. So weekly support down here and MMT weekly resistance levels are going to be right up in these diamonds. That's going to be the major one. That money has been sitting on the sideline, MMT. That money has not participated in the rally. And the majority part of the rally tape has been high frequency volume machines winding that tape up mathematically, just as they wound it down when we got it too overbought here. And the thing about it is there's a whole bunch of political stuff, there's a whole bunch of banking stuff around the world, and there's a whole bunch of other stuff that's on the outside of the actual movement, but it becomes the belief of those parties and the things that are being done. You can clearly see where the fear is coming down and the rally's intact. And it's quite normal. We called the bottom. Once you took out these tops of the first calendar year, this was where the S&P would shoot up and sell off. This is where the S&P would go up and test and then sell off the next week. And then actually made the lower low. And that was all part of this fear process. Everything that you were taught, but most importantly is how would I let my index put options run and how would I buy up and out of the money calls, MMTs, as you had witnessed in the live videos was there. Remember when we said that there was too many people buying puts on the S&P, that we were going to go a lot higher? Yeah, and that 1075 was always validated. Bam, that's the expansion. Look at that, MMTs. And this is a weekly mathematical MMT market maker platform. And these diamonds were ascending at the time, back over at that time. Here we are. And this is the top reversal to that low. And we're back mathematically in 1 month reversal out of several months down. You've had that where that short cover rally came up off the bottoms. And then you had some people that were chasing it. Then, of course, you had the high-frequency volume machines that were buying. That's a non-human transaction, by the way. I'm not going to go into that, but that was a big part of the move. Most of the bulls have sat on the sideline. Most of the bulls have not got in because they were waiting for a pullback that has not come yet. And what I am telling MMTs is that our resistance and our support areas, half of this last weekly bar right here, MMTs, is 1256.86. So if we do get resistance across here, we'll find out if the bull is going to come off the sideline, and the hedge fund managers that have lagged this move, and they know what I'm talking about. And if you do discover this video, and a lot of people around the country that are on live trading floors and or trading remotely have missed the majority side of the move because the summer price action volatility was unbearable for them to continue within the exchange model of the Wall Street tape. And we know it. We know what you go through. We do. Now the MMTs were here buying these bottoms and trading this part of the year and understanding that equities would trade a certain way as well, as they would and did. And all the live entries and exits, so the lower the fear, the bigger the resistance level I'm going to get. Because at some point, does the bull or the bear really believe right now that the move can go higher? And how can moves climb that wall of worry and go higher, and people are still sitting on the sideline until they do once and for all finally get triggered into that market? Okay? And MMTs, this is the gift of moving forward throughout that 1 calendar monthly 4-week price action movement, both in the upside, and then how that 4-week fear indicator matched it and how we got that diamond resistances coming across here. That's a major diamond support. We're going to watch each and every teeny line, because once we stop in here, that's when we're going to stop up there, and then that's when we'll start changing and readapting and changing the trade management intraday scenarios and the 1-day, the 3-day, and the 5-day calendar. And we'll make our adjustments accordingly in the put to call ratio, and we'll do a put to call ratio workshop so that you can understand that the put side of the market, now that we've had the 4-week reversal in the fear and the 4-week rally over here, that the call side is also up here and it's inflated, and that the put side is down here with the fear. And the put side of the market, once it gets mathematically too deflated and you hit that wall of resistance, then it's time to make transactions over here. SMF, MMTs, it's all going to be that mathematical calculation between the overall fear level and the part of the broader base S&P 500 earnings season is climbing down. What do I mean by that? We've gotten through a lot of them. Some have been good, some have been bad. It's not all that bad. Inflation runs rampant next year, MMTs. Let us not forget about 2012. Our analysis is always done a year in advance, as you have witnessed the truth and can verify it with anyone who would ever wish to ask. Now, let's make sure that you understand this weekly bar at 13. This weekly bar here is at 1237.74 on the S&P. That's this big down bar. Of course, we're well above that bar at the closing level of 1285.09. However, the upper side will be dependent on a morning session between buyers and sellers, in the midpoint. Then the later part, the last hour where program trading is supposed to hit the marketplace. That's where you traditionally can really understand how to trade that last hour. And we'll have special workshops on how to trade that last hour, and how to take advantage of that program trading, and understanding that intraday price action on entries and exits, both in the equity side, and let us not forget the call side, the put side, everything else that makes that movement go, along with your bear and your bull, and everything that you incorporate in the price action to manage intraday risk and price action volatility, both to the upside, and let us not forget the downsides like that and the upsides like this. So, as we cap the S&P 500 weekly with MMTs, we are at that level, and we're going to be looking at where this stops. And does it get a much higher level of support? And if it starts to work back up, then that means that ultimately, we'll be reversing somewhere here in the S&P. And that we will be 100% accurate without no lag effect. And let us not forget, we'll also use our intraday 15 and 60 and dailies now to confirm where that mathematical equation and or your SMF ratios start to turn, whether they turn negative and positive based on entries and exits, is how you're going to pass that judgment on now.